Hi everyone. I think I'll kick off now. As always, people are kind of going through, or coming through as we're going kicking off. That's absolutely fine. Obviously, for those that don't know me, I'm Sam. I head up the account management team here at Futrli. I see some familiar faces, some all across the world. John from the States, Martin from just around the corner, Mike, and so on. So really good to see some familiar faces and some new ones as well. As I'm looking out of my window today, it's not the best weather. So I think that's why attendance seems to be a little bit higher than it has done before. People are no longer sunbathing. We're now stuck with English weather, which is always fun. Today's session will be recorded, so we'll send out that following any material that I think might be useful. And we will have a Q&A session as well within today, so might need the full hour. We've got it there just in case we need it. But we'll probably look for the first half or so of working through some content, and then certainly feel free to put your questions in the Q&A function of the Zoom Q&A area, and we'll certainly look to come to them probably, like I said, at the end of the session, so we can kind of collate all of them as we go. And obviously today we're going to be looking through how to maximize the indirect forecasting power with Future Advisor. We've done some forecasting sessions before, but today I'm going to work through a couple of examples to kind of really work through maybe a bit more of the advanced areas of using the extra kind of toggles that we can, the different journals that we can change, and hopefully that gives some kind of good tips. So I'll share my screen and we'll jump into it. Cool, so hopefully you can see this now. And what we're going to do first of all, as always, is go to the Organizations tab. This is where we can connect up your client if you haven't already got them in Futrli to then forecast from. If we hit Add Organization, this is where you can then connect to your client. Just simply by clicking on the source, it'll then take you to a login page, and it'll then sync away. Simple as that. When it's in there, it would sync automatically every single day for you, and you can do a manual sync if you want to. When that client's then in there, we can then start to forecast from it. So if we go to the Forecasting tab, that's where we can see a list of all of your clients that are connected up, and you can then start to build out a forecast. When you first click New to build out a forecast for that client, these settings will appear. So we'll first need to input these. They'll firstly be put on like that, so do not pay tax. So we can then change it if they are indeed kind of VAT registered. So we can change it to quarterly, and then put the relevant VAT details. So we're then going to put in the last day of the VAT return, how many days after they pay the VAT, 20% tax, for example. And then on the right-hand side, we're going to put in our default accounts here. So that means then the VAT is going to be handled automatically. It will build up that liability on a quarterly basis and then pay it off as per those settings. And one of the areas that we're going to look to build into the forecast during the session is how to defer the VAT payment, which is going to be a common requirement in the current kind of pandemic, something that the government are allowing businesses to do. So we're going to build that in as well. So complete those settings. Once they're then done, they're kind of once and done. Don't need to repeat that. But if you do want to edit them, you can just click on the settings. If you don't need to, when you click New, you just jump straight into the forecast area. Just to recap, what we can then do on these forecast settings, we've got the Create from Scratch option, which is kind of like a blank canvas. You can also use the What If scenario, where you can then start to link two forecasts together. So you can have like a baseline forecast and then a what if we achieve something else. Really nice way to model the two side by side. You can use the CSV import, so you can upload one that's in Excel and then start to model it and then do whatever you need to in Futrli, present it, change it, and so on. And we then got the Create from a copy if you've got one in Futrli already and you want to copy it. And then finally, it's the Create from last year's actuals. So using last year as a basis, and then you can edit it however you need it to in the forecast area. So we'll use the Quick Create for this one. Give it a name here. Let's just call this last year's actuals test. Do. You then do a duration, anything up to 10 years. Certainly the conversation I'm having with accountants at the moment is kind of 1 year is the most popular. because 10 years is a little bit ambitious in the current climate. In any climate, really, I think 10 years is ambitious, but we'll leave it as 1 year for now. The start date, you can then change if needed. So if you've got kind of out-of-date books, you can change it back to June, for example, if they're only up to date till then. But we're going to leave it as August. This test data that I'm working on is absolutely fine to use. We can then click build. Cool. That's going to build out a forecast in a matter of seconds, which is pretty cool. And what we're looking at here is our kind of forecast workshops, our forecast area that we can build the forecast from. We'll present the information to the client in a different way, a lot more kind of visually appealing and dynamic fashion, using the boards or the printed reports. This is kind of like I said, our forecast workshop. That's where we construct it. Variety of different options at the top here. You can change the start date. So if you're working on that 10-year forecast and you want to jump ahead, you can simply change it. You change the view as well to a different view, depending on how you want to kind of work on that forecast. We've also got a search function as well. This is really good for you to then simply locate a particular account just by jumping straight to it, rather than having to scroll through the chart of accounts and open up the category there. This chart at the top is to help us visualize it. You can certainly toggle it on and start to see different kind of parameters, whatever it is that you want to look at. But it's simply, like I said, to help us visualize it whilst we build that forecast out. Then down here, we've got the main nuts and bolts of the forecast. It's our forecast workings tab. And we'll see it's laid out like a profit and loss at the top and a balance sheet underneath it. We can, however, view them independently by clicking on the profit and loss, the balance sheet, or the cash flow tab. So we are looking at a three-way forecast here. It is a fully integrated profit and loss, balance sheet, and cash flow to give you that full business approach. Cash is certainly important, but to have that complete accuracy, handling VAT accurately, for example, giving you that full business approach, I think that's a really good way of helping your clients in kind of current times, how to plan moving forward, to look at kind of everything that is available. So in the workings tab, we can then have a look at these numbers. So just to explain where these numbers have come from, we've done a last year's actuals forecast, quick create, so no changes. So effectively, we've taken last year's P&L and applied it to today's balance sheet. So this P&L at the top here is exactly the same as last year. So 168,000, that's exactly what they achieved in August 19. Same as 173,000, that's what they achieved in September 19. So it's last year's P&L with no changes applied to today's balance sheet. So if they had the same year again, this is what it would look like. Okay, it's quite a good one that you can have as like a benchmark. Something I've done on previous webinars, also with other clients, is maybe use this forecast as your kind of benchmark to work from. This is your year with no changes. You can then have another forecast with some kind of worst case elements within it, or even best case, and then you can start to compare the two. Like, this is your year if you did kind of not lose those clients, or if you didn't win that contract you're hoping to, you can then start to see the difference and how the impact would be and plan from that. But it's also a good starting point as well, which is what effectively we're going to use from today. Because we've got some figures in here, but we can now start to open up any of the categories and then start to play with any of the figures that are in there. So again, obviously all of these are last year with no changes. We can simply click on the cog to edit any figures, or we can add a new row to add as many rows as you want to fill the account. So just to explain what these are doing then, firstly, you can name your forecast. So you can name it kind of venue, hire, new revenue, or you could do it by client or project, or whatever it is that you want to kind of name your forecast there. Venue height, higher, that's better. And you then got the different forecast methods depending on what you're trying to forecast. So single repeating entry is, as it says, a one-off or repeating fixed amount. So that would be if you want to put in, let's say, 3,000. VAT is there automatically because that's what we put in the settings, but you can change it if need be. You can put the start date. So this is when we're going to kind of create this invoice. Put that for the end of the month. Maybe it's going to repeat monthly, or we could do it weekly, quarterly. Leave it as monthly. And you then got the credit terms down here. So we've got the single payment. That's I suppose the most common one, of just like having a straight 30 days. Or you could split it in 30, 60, 90 days installments. Or if we use the custom payment profile, we can then open up the ability to change those days. So in, say, 3 days, we're going to get 80%. And then maybe in 90 days, remaining 20%. Or obviously you could do 80 days, we're going to get 10%. And then we then got the last one, where we're at now, 100 days, 10%. And you can then build up to that 100% of the invoice and split it out. When we've then kind of completed your forecast area in that detail section, we can always have a look at the journal defaults if you want to override them as it says there, but also to just double check how those journals are working. So we've inputted that forecast item, but it's been split over 3 different kind of credit term agreed functions. And you can then see that working here. So it's handling the VAT as we said, it's hitting the balance sheet. The cash is then being accounted for as we've stipulated on that first page. We can then override the journals up here. We're going to be using that in a bit for the VAT deferment and other things as well. But in this sort of area, it's just good to get familiar with, because we can then just double check this is how we want those journals to be working and posted through that 3-way forecast that we put in there. If we then hit save, we'll then populate it there. Cool. So we can now see that 3,000 repeating through on the P&L. If we then went into our balance sheet, we'd also see it in here as well. So it was called venue hire, wasn't it? New revenue, there we go. So hitting our, where we're at the bank, I think. And you can also see it in our current assets in our accounts receivable, working through there. So that's the first method. That's the single repeating entry. One little tip, if you've opened up some areas like I have, you can collapse them all at once rather than having to collapse them individually. But I'm now going to open up wedding again and go back into venue hire. So if we click edit, we can then have a look at the other methods. We've got the single repeating. We then got this set monthly growth rate. So this is if you want to maybe increase or decrease each period by a certain percentage. So let's say we're going to have a 2% increase. The first amount is going to be 1,000. We're going to repeat it monthly. It's then going to have maybe just a normal credit term of 30 days. And then hit save. We can now see those 3,000 change in a sec to 1,000, increasing by 2% every single month then. So that's the monthly growth rate. We've then got the other methods. We've got on the fly is the next one here. So entering fixed amounts month by month. This is where you can simply type in individual figures. And you can also use the quick edit options to either set them to a particular figure, but just by typing in, let's say 100, changes something like that. Or we can then do some kind of cool stuff, maybe like decreasing them by a certain percentage. This is a good way to looking at like furloughing of staff, where you can reduce wages and things by a certain percentage and just kind of work with it in a quick edit fashion. And we'll see at the top, each method will change, but then the second half, the bottom, so the top half differs, the bottom half remains the same. So we've got the credit terms, we've got the VAT and when it's going to start, the invoice date. It's just the top half which will change from method to method. You then also got the formula method. This is a really good one if you want to link a bit of non-financial data, for example. So you could upload customer headcount and then start to forecast that. So maybe it's a restaurant looking at kind of amount of tables to be kind of filled. We can look at that, or kind of amount of products to be sold. You can upload that, or you can link it to another account. So you could maybe have cost of sales is 20% of your income. So maybe if we input that, let's go down to our cost of sales. Let's go down to beverage costs. I'm going to go down, actually, let's go to equipment. We've got the venue in here, potentially. That would do. I'll just delete this and we'll just link it to the venue hire. So we're going to say that equipment and server items is going to be linked to our venue hire. Just click on the plus, use the formula method. we now search for that account by typing in venue, so we've got venue hire. I think it was a wedding that we were looking at. We then go times, let's say 0.2. So we're going to find 20% of each month's value for our cost of sales line. So effectively saying our cost of sales is 20% of our income then. Again, we can change the start date if you want to repeat the credit term and so on. Then hit save, then see it populate like that. So we've then got a really nice way of building up that forecast by having them linked through, because the cost of sales a lot of the time is going to be directly related to our income line. So by having that formula, that means if we then go in and change these figures, the cost of sales will change automatically. Let's just change the figures just to demonstrate. We should then see both lines change. There we go, slight little change then. Cool. And then the next method is the manual journal. This method is used mainly, I suppose, in clearing the opening balances. So we can have a look at that now, but also actually we're going to use it in the VAT deferment option. So if we go down to the opening balances, we can clear that off. And by that, I mean, if we go down to our current assets, and we can see that balance there, that £1,154,000 and odd pounds is our carried forward opening balance. So that means that's the amount of debt, quite a bit of debt for this company, that was left outstanding at the previous month end, so at July. We need to clear that off, otherwise it'll just remain static in there. So we'll always be owed that money. Obviously, we can see we've started to add in now other kind of items. So our venue hire, for example, is now going to affect it. But what we need to do is change our opening balance just so it's then accurate moving forward. So if we click on the plus, we can use the manual journal. And let's say, for example, we're going to get £100,000 of that is going to be received over the next 10 months. So depending on how quickly it is, you could clear it all off in 1 month, or it really depends on obviously what the client thinks they're going to receive it back. 100,000 transferred to our current account. If I can locate it. Current account, there we go. We're going to repeat monthly, and it's going to repeat every month, and it's going to end after 10 months. Then hit save, see it populate there. We've now cleared that off. So it's remaining with a residual 157,000, but we've now accurately cleared off the opening balance, so we can then accurately move forward and forecast the kind of rest of the scenario, I suppose. Cool. So that's, I suppose, the methods that we've gone through. We built out a forecast, and we now can have a look at how to look at the VAT deferment. So firstly, what we need to do when we're deferring VAT is go to our cash flow tab. We can then start to see the amount of VAT that we need to defer. So we open up our receipts, come down to VAT. You can see we've got a 28,550 there. We can then go down to our payments. We can see we've got a 34,161 there. So we need to find the difference of that, and we're effectively then going to balance off the receipts and payments then, and then put that amount when we are actually going to be paying it, when it's deferred. So what I need to do, I need to do a quick calculation. So I'm going to do 34, I'm getting a calculator up, by the way, I'm not just doing this in my head. 34,161, and we're going to take away 28,550. Cool. So it's 5,611. Cool. Hopefully I remember that number. So what we're now going to do is then, like I said, kind of balance them off by using the manual journal function. So if we go into the workings here, we can then go down into our VAT account, and we can then effectively, like I said, create a debit so we can credit our liability. So I'm going to locate it just by locating like this, and click on the plus here. If we then use the manual journal, we then can now put in that figure. And what we can do is make that as a minus figure. So that will mean then, because we were going to be kind of paying that off, we want to reverse that behavior. And it was going to be in October, wasn't it? And we are going to be transferring that to our other accounts of our bank there. Cool, with no repeat. And with a bit of luck, when I hit save, we'll let that calculate away. We can then go into the cash flow, go down to our receipts. We can see 34,161 there, and we can see 34,161 there. So now we've balanced the two off, so we are not paying or receiving any VAT there. So now we've cleared it in that October balance. We now need to pay that when we are going to be actually paying that VAT. So if we go back into our workings tab, and if we go down to our VAT account again, and click on the plus, again the manual journal, again we can paste in the amount there. We're going to put it to March, which I believe is the date that we can defer to, and we're going to do bank there. You see we haven't got the minus in this time because we are now putting it in as that, and click save. I calculate again. We can now go back into the cash flow just to double check it, and then we go down to here. We can see the figure there in March. That's how effectively how we defer the VAT. On this, I got a nice help article that support team have written. I'll certainly share that as well. So don't worry about, I suppose, remembering all those steps. Not there's many, I suppose. All we're doing is just using two journals, one to balance the kind of actual payment off when it would normally be due, and then the other one to move that amount to when we can now defer it. Cool. So that's the kind of first example that I wanted to work through. And another one is prepayments. So it's another area that we can then start to use the journals. And then prepayments rather would be used in an example when maybe you've got rent. So we can then recognize the rent on a monthly basis, but actually maybe pay on a quarterly basis. I'm going to do it in here if we've got like marketing spend on a similar sort of fashion. So we need to go down to our marketing account, and we then need to kind of put these figures in. So again, I'm going to locate it, marketing other. I'm going to click on, I'm going to remove it entirely just so we don't have last year's figures in there, so I can work on a blank slate. And then we can click on the plus. So let's put in here, let's say 2,000. I'm going to turn off VAT here because we're not going to be paying any VAT in this, and that's going to allow us to account for the no cash element. We can then start at the end of the month. We can have it repeating monthly as normal. If we then go down to the override journal defaults, here, like we were before, we're just checking things. This is where we can now start to change things. So we can put it to a no cash movement, meaning that we're not going to be paying off anything in our P&L. All we're going to do is change where kind of we build up the liability effectively, so we can then pay it off on that quarterly basis like we were just talking about. In here, we need to change this to a credit, and we need to put it to our prepayments. So now we are setting it up so we are crediting our prepayments and being able to, like I said, build that liability up. If we now hit save, we'll see that populate through there. Cool. And we can then now go down to our prepayments account. So again, rather than bother to find it, it's taking me ages, I'm just going to locate it, prepayments. There we go. Cool. And we'll see that 2,000 that's been sent there that we've just done on the previous example. We can click on the plus, and in here, I'm going to be putting in here now 6,000. That's our quarterly amount. I'm going to repeat it quarterly, and that's all we need to do. Click save. That's now accounting for that on a quarterly basis. We can always check the journals then, and that's simply building out through there. I've left VAT on there, but we can take VAT off if we need to. But yeah, that's now ensuring that we're representing the monthly amount on the P&L, and we're then paying it off on that quarterly basis. So we can see that figure of 19,718 increases as we build that liability up, and we then pay it off every quarter. Cool. That's a couple of areas. Effectively, when you're building through any areas such as depreciation or wages or anything like that, you're kind of doing the same sort of setup, building up the liabilities, paying it off, using the journal to kind of move payments around. So that's kind of the main nuts and bolts, I suppose, of the more advanced areas of forecasting in Futrli. So let's say we've now finished this forecast. We can now start to present it. So I'm going to go into the boards, and what I'm going to do is use one of the pre-built templates we've got in here. I'm going to use one that we haven't used in these webinars yet. I'm going to look at the tax planning board. So these templates, just to recap, they are available for anyone that doesn't have them. Certainly, if you're going through anything in today's session in your own time and you wonder that you should have had that report or whatever, by all means drop me a line. But you can message our support team as well about any query or any kind of thing you think you might be in, should be in your account. Certainly give them a shout as well. This report has a set of instructions and a how-to video, so you know how to use it. What we're going to do firstly is duplicate the report. So we're going to keep the original as the master copy, and we're then going to amend the copy version. If we then remove these instructions and the how-to video, because I'm telling you how to do it now, so you don't need to watch the video. And we can then rename this, so we can call this tax planning example. You'll then refresh the whole board round. I'm just going to hit refresh just so it all catches up there. Cool. So because it's looking at accountants' example data, firstly I'm going to change the whole report to look at that client we're just working on, Real Story Productions. Click update. Cool. So now we can look at the report with those kind of real data. This chart here is looking at the last few months. I don't know how many months it is, last 6 months, I think, or 8 months, on some kind of top level business insights. Anything that you want to change in here, by all means, flip the card round and you can change the dates. We can change what's on the card. This is just, so it's based off client feedback, and this is the template that we built out. But by all means, feel free to amend it and add in extra bits that your client really wants to see. We've got the last 12 months there, looking at our cash position. That's the closing bank with a net cash flow over it. And down here, we've then got our kind of tax planning elements. So this is looking at the last few months up until last month. But the next one over here, we can change to look at forecast data. So if we flip it around, we can then have a look at just forecast information. We can change it to the forecast we're looking at, last year's actuals test. We can then change the period. So I'm going to look at just maybe this calendar month and the following 3 periods, for example. You see there's got a subtitle of update to year end. You can simply put your year end date in there. You can change however you want to. I'm just going to put it forward. So it's going to be kind of next 4 months. It's going to be what I'm going to be showing. In the report tab, we've got all the elements in there already for us. Don't need to amend it if you want, unless you want to. We can click done there. And we've now got our kind of forecast presented in a P&L looking ahead for the next 4 months with a corporation tax provision, which is simply a formula of 19% of our net income there. So it doesn't always have to be a complete forecast board. We can just include bits to complete bits of year end and then work from it. Then down here, we've got a rest of year versus forecast. I'm just going to simply look at this month for comparison. See here, it says how are you comparing against your forecast? Do we need to revise your strategy? Certainly that's an important thing of doing, I suppose, with scenario modeling and forecasting, is to constantly look back at how we kind of tracked against the budget, what needs to be changed, and having that kind of dialogue with the client is going to kind of develop the forecast and the reforecasting that you can do. In here, I'm going to do actual data and then our forecast. Because the last year's actuals -test is not the best name, I'm going to change a custom name. I'm going to call this forecast. Nice and clean. Otherwise, the column heading will be last year's actuals -test. I'm going to put just this calendar month with no previous periods, and then click done. So now we're just going to compare simply this calendar month versus the forecast, and we can start to see how we've tracked. Those actual data column will just populate over time. You can also set it up so you look at the full budget, so that's 12 months, and then every subsequent month of like September onwards would be 0 at the moment for actual data, but then it will pull through as that data flows through. So it's a nice way of seeing how you constantly go against your forecast. We've then got the forecast cash flow, which won't load until we tell it what forecast to look at, because this card is simply looking at forecast data. So we look at forecast data. I'm going to look at this calendar month and the following 11 months. I'm going to change it to be the right forecast, which is actual forecast test. And then I'm going to click done. We've then got that forecast cash flow. So again, presenting the forecast we just built on, presenting it in a kind of nice intuitive fashion. We can open up the categories. We can see that VAT being kind of amended and changed, and we can really start to kind of work through it then. That's then how you start to present the forecast. So I thought it would be good to show it as a board. Obviously, you can then print directly from here. That will then put each individual card on its own individual page, which is a nice way to quickly print out that report. And you can also use it as a printed report. So you might want to import it in, or you could build it out from scratch in there, where you can have some kind of further editing options in the printed reports. So cool. That's pretty much what I wanted to go through. So I'll stop it there. That's just my PDF that's popped up. If you've got any questions, then now's your chance. Whack them in the Q&A function of Zoom. I'll be happy to cover anything, whether it be about this or something else. Yeah, like I said, those couple areas that I kind of covered using the advanced journals are the sort of methods that you can apply to pretty much all the areas of forecasting and Futrli. Fairly straightforward, but I think having that integrated approach is the way to do it. So one question came through just around the VAT and the kind of setup of it. I don't know if you kind of missed when we were setting it up in the settings, but yeah, effectively, to answer your question of how do you set up the VAT, it's simply just in those settings function. By putting in, when you go to the forecasting tab, click on settings, your settings will appear. You can then put in the fact that it's quarterly VAT, it's 20% tax, and the default accounts. That will then mean it'll just handle VAT completely accurately based off those settings. You can then change the kind of tax amount based off if it's an account that's not VATable, for example, or doesn't have any tax applied. And you can then obviously use the VAT deferment option that we were just doing if you want to change it at all. Cool, that's the only question that came through actually. So hopefully I managed to explain that clearly enough for you, but like I said, I will send out the recording of today, as well as the help materials that I think will be relevant. Oh, one question's popped up. A few have come through instantly. Okay. Can you set a board to compare two forecasts? Yeah, you can. So I was looking at actual data against budget, but you just simply change it to be forecast against forecast or budget against budget. So if I just quickly show you, for example, I just jump back in. In here, we've got that actual against forecast. We can simply change it to be forecast with it's the same forecast, but they are last year's actuals. Then click done. So now be the two compared, budget against budget, for example. Simple as that. And yeah, we can compare 2 at a time. So you could do actuals against budget. We could do best case, worst case compared. Certainly use it that way. Cool. One question. Well, a few other questions come through now, so which is good. Is there a change tracking mechanism, i.e., who changed what when? Unfortunately, not. An audit trail is not something that's there. There is a text box above the forecasting kind of screen in the workings tab where you can put in features. But yeah, there isn't something that kind of tracks it automatically. Certainly when you invite a client in to your account, if you just give them regular user access, that will mean they can't see the forecasting tab and they can't therefore edit any forecasts. So you can keep complete control there. Only anyone that's got admin privilege is able to go in and edit the a forecast that might have been built for that client that they got access to. So yeah, it really depends on how you, I suppose, structured the amount of users or who's logging into your account. But by all means, you can write things down and track them manually, albeit manually. I appreciate that. Yeah, so hopefully that somewhat answers that query. Cool. Can you make a report a board? No, in short. So we can import from a board into a print report, but we can't do the same the other way around. So if you want a board, then build it as a board. And if you want to print a report, you can either build it from scratch or you can import through. Cool. Is there an option to set cash or accrual for the VAT scheme? No, not technically. You can just turn off the VAT. So you're therefore kind of zero rating it. That will then mean it obviously just pays straight away, so there's no kind of build up of that. And you then have to put in a manual journal effectively to account for it. It's set up for the accrual scheme. And the reason for that really is the vast majority of our clients work with accrual VAT there. But if you're working through cash, do message the support team, so support@futrli.com or the in-app chat messenger, because they can effectively walk you through what I mentioned there of turning the VAT off and doing a manual journal. So we get it as close as possible. It's not exactly bang on, but it is pretty close. So you can certainly ask them. Got another one here as well. How many comparisons can be shown at once? 2 on one card. So you can show obviously as many cards as you want to one page. So if, for example, you've got, let's say, actuals, budget, and forecast you want to compare, you'd have to do that over 3 different cards. So you could do 1 page on a printed report, or 1 report that's looking at comparisons with 3 separate ones. So you do actuals against budget, actuals against forecast, and then forecast versus budget. So we just have the 2 at once. Cool. That is all the questions, which is good. So we had 1 at the start and then loads came through, which is really good. By all means, if you've got any questions as well following today's session any more, then you can, like I said, fire them at myself. The support team always on hand. But hopefully that was useful. Hope to see you again, and do have a good. Oh, no one came in. Thanks so much, Sam. Good. There we go. Great, no problem. Have a good day. Have a good evening. Stay safe. Thanks a lot. Bye bye.